Alright guys, we're back with Wall Street. What an amazing move we had here yesterday. And right now I'm showing you the monthly chart because I want to stress out this particular point. I think it's remarkably interesting. You remember the bottom key level I was talking about as the last line of resort at 24.52. Right, according to the system that was starting to develop here roughly around the beginning of 2018, that trading range that I was able to depict with this blue system. Now I was talking about the bottom key level 24.52 as the last support, and if that level is going to be broken, I suggested that price could go so further downwards that it would make this little downside move here to look like a walk in the park, so to speak. There's so much potential on the downside. You can actually see that I was beginning to prepare myself for a full-fledged breakdown here. So I started to align my, important key levels here. These are clusters, mostly corrective clusters, because you can see how high we still are if you measure the whole grand trend that started roughly around 2009, the beginning of 2009, the end of 2008. So we're talking about 10 years of upside trend. We're still very, very high. But having said that, you can actually see what is going on right now. Take a look at this particular key level again, 24.52. There is a massive spike here suggesting that we may have been, basically price may have been just false breaking on that key level. It was excess noise. It was overshooting to the downside, and now it's bounced back all the way just to establish itself, just to base itself back above that key level. Now I want to show you the daily action because that's also quite remarkable. I mean, if you think about it, we just had the worst Christmas Eve in stock market history just to witness the biggest one-day gain ever in the following trading day. Take a look at that. So price was overshooting to the downside, but it had to come back just to base itself back above 24.52, and that's how it looks like from the daily perspective. Really remarkable stuff. Now, I did say that I think it's more probable that price will not break below 24.52 and actually give us the next upside leg, because if you remember, I was counting the legs here and I came to the conclusion that we are on the third leg, and the third leg is not the one to break the a trading range. Usually it is either the fifth or the sixth leg, which was a bit suspicious to me at the beginning, but it was broken so far below 24.52 that I had to begin to adjust for that case scenario where price is going to basically enter a bearish market, right? More than just a downside correction or a sideways correction. Anyway, as long as price remains above 24.52, it is going to be highly likely that we'll see a full-fledged upside reversal and the next upside leg that should take us right back to the higher section again, starting with the key level of 27.91 right here. That is the major key level, but I also should mention the 26.12, which is another important, the mid-low key level here, another important resistance. But before I'm going to pull the trigger on a bullish position on the S&P 500 or the Dow Jones, by the way, presenting the very same technical picture, I want to make sure that price can sustain these upside move. We just had one strong upside day. First, we want to make sure that this month is actually going to close right above that key level as it looks like right now. We want to make sure that by the end of the month, which is also going to be by the end of the year, it's going to be a yearly close. If it does close above 24.52, that's going to be huge in terms of indication that we're probably going to have here an upside reversal. All right, that's about that for the S&P 500. Looking really interesting right now. I will follow up and keep you posted. See you tomorrow.